Good evening, everybody. Welcome back to the channel. My name's Max. I appreciate you guys being here. All right, I made a video today and I got some advice in the video that I thought was good advice, and it got me thinking. And what I thought I would do is the video I made is very dry content and lasted almost an hour. It's not that interesting. I know that my presentation style doesn't help that fact. So I do believe that the conclusions aren't boring and that they're important to know and that they might be helpful to other investors. So I started a new video series that I was really excited about. The idea is I go back and I look at how a Tesla or TSLA investor would have done using different money management strategies. For instance, I talk all the time about reinvesting 2/3 of the dividend. So of course I track that strategy. I also track the strategy of just taking the dividend in cash. Okay. I also track the strategy of taking the dividend and buying Tesla shares. I heard Coach call that strategy the dividend wheel the other day, and that's a great idea, using one of these high yield stocks to buy shares in the actual underlying. And I finally track an investor who doesn't believe in high yield because of all the erosion. He doesn't believe in them. So he instead just buys shares of Tesla, and to make it a fair comparison, he sells shares every month, the same amount of shares he needs to sell to equal the other guy's dividends. They all start with the same amount of money, and we see how they all came out. I give them all, funny names and stuff. But anyway, all you need to know is the dude that used the TSLY divvy to buy Tesla shares came out ahead. He was up like 12% for the year. I have charts. We're going to look at that at the end. And I'm also going to show you the spreadsheet and real quick. And we're going to look at each guy's balance of cash versus balance of stock. All right. So the guy that bought $100,000 of Tesla and did nothing else came in second. So that guy, that's buy and hold. I called him buy and hold Bobby. So that's just kind of our measuring stick. That, of course, isn't an income investment, but it is a way of investing that some people use. So we can use it as a comparison. Okay. So then I had the guy, Max, who reinvested 2/3 of the TSLA dividend and bought more TSLA shares with it. I've talked about that many times on the channel. The idea is that your average share price, you buy more shares as the price comes down, and you try to keep your average share price and your yield on cost somewhat steady. That's the idea anyway. Well, Max over the past year and a half was down 3.5%. He was in third place. So the dude that sold the Tesla shares to live off of in lieu of investing in TSLA, he came in. Who would you want to be? So the one guy, that's what I'm trying to say. The one guy that bought and held shares of Tesla, the buy and hold guy, he started with 545 shares of Tesla. He still has 545 shares of Tesla a year later. 3 years from now, he'll have 545 shares of Tesla unless they do a split or reverse split. Okay. Like I say, that's not an income strategy, but it is, maybe that's a position some people would rather be in. Okay. But there's also the guy that used the TSLA dividend to buy more TSLA shares. He started with 2,445 shares. He finished with 4,426 shares of TSLA. Plus he had 24,000 in cash on a $100,000 investment over a year and a half. Think about that. Yeah. Total return was down 3.5% for the year. But this guy has 2,400 in cash and 4,400 shares of TSLA. I mean, to me, that's not the worst strategy. Liquid Larry, the guy that just bought the shares of TSLA and then keeps the dividend that they give him in cash, he has 54,000 in cash, and he still has the 2,445 shares of TSLA. The only problem is those shares are only worth 40% of their original value. Of course, this is mainly due to the dividend being paid out of the NAV, but it certainly hasn't helped. The Tesla stock price has been trending downwards most of the time for the past, 8 months or since last summer. Pretty much it's been trending sideways to downwards. Anyway, that happens. So Larry, the guy that just holds the TSLA shares and keeps the dividend in cash, he is down 4%. So he's pretty much tied. We'll call him tied with Max, the guy that reinvests 2/3. All right. So selling the Tesla shares did not have great results. The guy that owned Tesla and sold shares to live off, if he had the worst total return. he was down 25%. Okay. Of course, this wasn't really fair because Tesla's a growth asset and should be treated as such. But some people do believe in this method also. So I did want to study it. And this will work at certain time periods over certain stocks. A better study would have been to take someone who made a bunch of money in Tesla and now they're allocating some into TSLY because they have a lot of money. You know, what I'm saying is the way that people get rich in Tesla, it's not with TSLY, it's with Tesla. Okay, that's true with any growth assets, you know. Anyway, all right. So this is more how the funds are designed to be used, in my opinion. Like I say, using Tesla for growth assets to accumulate wealth or other growth assets in the accumulation phase, and later in life when you're in the distribution phase or when you want to diversify, then mixing in an allocation of high yield along with other stuff. All right. Let's consider taxes. Okay, of course, the kind of taxes you have that plays a big role. In a tax-advantaged environment, you might be fine with one of the active trading strategies, like the guy that's using the dividend to buy more shares all the time, or the guy that's using the dividend to buy Tesla, although that would be a little bit better of an idea because Tesla, you're going to hold more than a year because it's a growth asset. So those shares that you buy, those should all be long-term. So that would be a little bit better than the guy that's just spending 2/3 of the TSLA dividend to buy more TSLA shares. So then the dividend goes up. So then his taxes go up. That would be the least tax efficient. I would only do that one in a tax advantaged environment, most likely, especially if you have a high tax bracket. There's not going to be anything left. All right. If you're really in a super high tax bracket and you're really super concerned about taxes, of course, just buying and holding Tesla would always be the best option. You know, this strategy was up 7% over the past year and a half, but it generated no cash. So in a fixed income environment where you really need some income, the plan where you use the dividend to buy more Tesla might be a more effective choice. The idea is this account will grow in value over the long term because the Tesla shares you should hold theoretically forever, that you're just building a position in Tesla. And so that you won't pay the taxes on that. Not only are they long term, you also don't realize it. Don't pay the taxes until you realize the gain. And since realizing the gain isn't part of this technique, that's probably, you know, a good strategy in a non-tax advantage account. Probably the best strategy, maybe the best strategy overall, but probably definitely in a tax advantage account. Of course, check with your own tax advisor. Of course, I mean, it can make a big difference. I mean, a huge difference. Of course, there's no one best choice, and just choosing the one that's up the most, for one thing, that strategy may not be up the most next year, probably won't be. So that's one problem. The other problem is it depends on your individual situation and your risk tolerances. And this is what I wanted to show you with that. Let's look at this way. All right, I want to show you this just to reiterate real quick. We'll start at the most conservative. This is just buy and hold. This guy finished with 107,000, started with 100,000. So he has, I think that number is 545 shares of Tesla. That's what 100,000 bought him on the day that the study started. Okay. All right. So that's fine. I mean, that's a strategy. This is Balance Billy, and this is the guy that uses the TSLA dividend to buy Tesla shares. So he started with 2,495 shares of TSLA, just like they all do that use the TSLA component. Well, his first dividend was $4,965. Well, that bought him 13 more shares of TSLA. So then he had shares bought. Oh, no, I'm sorry, not of TSLA. That bought him 13 more shares of Tesla. So now he's building a stake in Tesla. It's worth $1,400, you can see. But over here in this right column, you can see a stake in Tesla grow. Now it's worth $12,000. His overall stake is worth $78,000. His Tesla stake is worth $12,000. Okay, so now we can keep going down. And you can see his Tesla stake overvalues. I mean, at some point, I think overtakes his It's more than half of his account value. It overtakes the other part. He ends up with $72,000 in Tesla. And whatever the difference between 72 and 112 is, it'd be 40,000. Okay, so he only ends up with 40,000 worth of TSLY, due to the NAV depletion. His NAV got depleted over the year and a half to the tune of about 60%. Okay, so but that might work for you if you're interested in building a position in Tesla. I mean, the total return was awesome. 12.94 hard to argue with total return. This guy doesn't have any cash. So if you wanted to build a cash stockpile, this wouldn't be a good strategy. Okay, so then this guy right here, this is simple. He takes the Tesla stock and sells it for income. He started with 545 shares, and every month when he sells the equivalent amount of whatever the other guy's Tesla dividend is, we take it off his balance. So, you could see by the end of the time, he only has 131 shares of Tesla left. Not that but the way Tesla's going, if Tesla rallies and splits a couple of times, this guy may still be fine. And this may be the best strategy, especially if you consider, or I don't know the best strategy, but this may be a good strategy for some folks. Okay. All right. So this guy right here, he's the guy that reinvests 2/3 back into TSLY. Okay, so he started with $24.95 of TSLY, and he's building a TSLY stake. So if that's important to you, he finishes with 4,426 shares of TSLY plus 24,000 in cash. Okay, it's not going to be tax efficient to trade that method, but all right. But he is up. He's actually down 3%. Then Liquid Larry's down 3%, and then. That's all. Okay, so now let's look at the chart. And then we'll talk about some conclusions, and you guys can get out of here. Okay, it's interesting to notice. See, I just wrote up here what each strategy did. So first place was use Tesla dividend, or I didn't say TSLY, but it should say TSLY there. Use TSLY dividend for Tesla. They finished at 112,000. If you notice, they just passed, that strategy just recently passed buy and hold. You can see buy and hold was raging last summer. You started with 100,000 in a while. Last summer, you were up to 158,000. Of course, you made a pretty nice little head and shoulders here. And then since then, the market, bled off 60, 70%. That's bad. It's hard if you consider that the stock's down 70% since last summer. But all these strategies, what I would call the reasonable strategies, are just about even. They've been keeping up just fine, even with the stock that's been getting killed over the past 6 months. Now, over the past year. Now, over the whole time, it's pretty much where it started. Look at buy and hold, started at 100,000 and finished at 107. So buy and hold's up 7%. So that's kind of our measuring stick. Okay. Now, this guy, I think I did Gary dirty. He's not really at 25,000. 25,000 is all that his Tesla shares are worth because he's been cannibalizing his Tesla shares for a dividend. But the dividend's been building cash, and he has something like 50,000 in the bank. So really, he's at 75,000. To be fair, to compare it with these other guys, but that's still down 25%, which is, which may work for some people, but it's the worst. It was the worst outcome in this test. Okay, so I hope you guys like that. Let's see what conclusions I have. Let's see what I have, what I jotted down. All right, so I plan to simulate other stocks soon. One of my critiques said that people don't like Tesla anymore, and that's a fair critique, and I really haven't thought about that. I chose Tesla because it had the most data. It was either going to be Tesla or OARC. And next, I'm probably going to do OARC, and I know people are going to hate it, but I'm going to do the ones that have been around a year first. The reason I chose Tesla instead of OARC is because Tesla has an inverse, and I'm going to start some studies on Tesla and the inverse. So I just wanted to get a head start on that. Okay, so remember, all this is backwards looking, and I'll take suggestions on other underlines, but I want to be sure to try to start with people that have been around at least a year. But that leaves us a handful of underlines we can look at. Also, I'll take suggestions on more sophisticated strategies. I realize there's some better strategies, and I already have one in my head that I can't wait to model. I'm going to tell you guys about it since you waited around to the end of the video. So I'm really proud of this one. Here's what I think is probably going to be the best strategy in the end. Or that's my theory. That's my hypothesis. We'll have to test it. But I'm going to say the dude that buys TSLY, he takes 1/3 of the dividend and buys Tesla shares. He takes 1/3 of the dividend in cash, and he takes 1/3 of the dividend and buys TSLY shares. So he's building a stake in Tesla and TSLY and cash simultaneously. I'm hoping that will be an all-weather type plan that has better risk-adjusted reward than the other ones. It's going to be kind of challenging to model, but anyway, I'm going to be working on that one the next few days, and also I have the Jay interview. It should be out tomorrow. I'm making good progress on it. Anyway, thanks so much for all the suggestions, and thanks for your help. And I hope you guys like this video. I can link to the longer video. If you want to watch the longer video, go watch it. But I just told you the conclusions. So now you don't have to watch the longer video. All right. Have a good one.